In this video, I'm going to demonstrate how a sale and leaseback transaction is accounted for in the books of the seller-lessee in a case where the sale is at fair value. So a sale and leaseback transaction occurs when a seller or an owner of an asset decides to sell the asset to a buyer and then again lease the asset back. Okay, so the owner of the asset may need funds, he may need proceeds immediately, so he decides to sell the asset to a buyer, but then also he wants to continue to use the particular asset, and so he will lease it back. So by way of illustration, we have seller transferring ownership of the assets or transferring control of the assets to a buyer in a sale agreement. Then he's going to take the asset back on a lease. So in this case, the seller becomes the lessee and the buyer becomes the lessor. So we have seller-lessee and buyer-lessor. Let's go through this question. On 1st January 2018, Calc Limited sells an item of machinery to Code Limited for its fair value of 3 million Ghana cedis. The asset had a carrying amount of 2 million Ghana cedis prior to the sale. This sale represents the satisfaction of a performance obligation in accordance with Ifrs 15, revenue from contracts with customers. Calc enters into a contract with Code for the right to use the asset for the next 5 years. Annual payments of 500,000 Ghana cedis are due at the end of each year. The interest rate implicit in the lease is 10%. The remaining useful life of the machine is much greater than the lease term. We are required to pass a journal to record the above transaction on 1st January 2018, and then also prepare extracts from the statement of profit or loss and statement of financial position at 31st December 2018. Alright, so in a sale and leaseback transaction where the sale is at fair value, okay, you go through 5 steps in order to record the transaction on the date the transaction took place. So we have sale and leaseback, at fair value, and the condition is that the sale meets in Ifrs 15, we realize that a sale is deemed to have taken place when a performance obligation has been fully satisfied. Okay, when a performance obligation is satisfied, then we say a sale has taken place, and so the seller can recognize the sale proceeds. So the caveat in this particular question is that the sale meets the Ifrs 15 criteria. So in this case, you go through 5 steps in order to generalize the transaction. So first of all, what you have to do is to recognize the sale proceeds. You recognize the sale proceeds. Then secondly, you are going to derecognize the assets. Derecognize the assets. So under normal circumstance, when you sell an asset, because you no longer own the asset, you are going to take it off from your books. That is, you are going to derecognize the asset. And then the money or the proceeds you receive from the sale, you are going to recognize it as an asset in the form of cash or bank or a receivable. So this is in relation to the sale. Then the other part of the transaction is that you are going to lease it. And under IFRS 16, leasing, the lessee has to recognize a lease liability and a right of use asset. So you recognize a lease liability. Then also you recognize a right of use asset. Finally, you are going to recognize either a gain or loss. As the balancing figure. So first of all, you recognize the sale proceeds. Secondly, you recognize the asset because you've sold it. Thirdly, you recognize a lease liability. Fourthly, you recognize a right of use asset. This aspect pertains to the lease. So leasing. Then finally, you recognize a gain or loss as a balancing figure. Okay. So let's start solving the question. Requirement A says we should pass a journal to record the transaction on 1st January 2018. So we are going to prepare a journal by using the 5 steps we've outlined here. So we have journal. The name of the company is Calc Limited. So we have journal. We have our debit here and our credits. First of all, we are supposed to recognize sale proceeds. So when you go back to the question, you realize that the asset was sold for its fair value of 3 million. So this is where the sale is at fair value. So we are told the asset was sold for its fair value of 3 million. So we recognize sales proceeds of 3 million. If you receive money, it is a debit. So we are going to debit the journal with 3 million. Then secondly, we are supposed to derecognize the assets because we've sold it. So we are going to take it off from our statement of financial position. We are going to derecognize the carrying amount of the asset. So when we refer back to the question, we are told the carrying amount of the asset is 2 million Ghana cedis. Assets has a normal debit balance. So if you want to derecognize it, we are going to credit it with 2 million. Alright, the next thing is to recognize a lease liability. So we have lease liability. We have to do a working on that. As you may have noticed in the previous tutorial video on leases, a lease liability at the date of commencement is measured at the present value of the lease payments that have not been paid or that have not been made at the commencement date. So we are going to measure the lease liability at the present value of all future lease payments. So let's do the workings here. We have working 1. we find the lease liability by multiplying the annual lease payments. Multiply the annual lease payments by the annuity factor. In the question, we are told that annual lease payments are 500,000 Ghana cedis. So we have 500,000 Ghana cedis. We are going to multiply it by the annuity factor. But there's a formula for calculating the annuity factor, as you may have known in the earlier videos I did. The formula for finding the annuity factor is given below. It is given as 1 minus 1 plus r raised to the power negative n all over r. Okay, and r represents the interest rate implicit in the lease, and n represents the number of lease payments remaining. So r, interest rate implicit in the lease, and the n represents number of lease payments remaining. So we are told the lease term is for 5 years and the annual lease payment is 500,000. And then we also told that the lease payments are made at the end of the year. So this means that we have number of lease payments remaining to be 5. So we have 1 minus 1 plus r. R is the interest rate implicit in the lease. And in this question, we are given the interest rate implicit in the lease to be 10%. So plus 0.10. Then we divide it by, we raise it to the power negative 5 because we have 5 lease payments to be made in future. Then we divide it by 0.10. This gives us an annuity factor of 3.7908. That is when you round it off to 4 decimal places. So we are going to multiply this by the annual lease payment, 3.7908. When you multiply 500,000 by the annuity factor, we are going to get 1,895,400 as our lease liability. So we go back. A liability has a credit balance, so we write 1,895,400. Then the next step is to recognize a right of use assets. So we have right of use assets. So we have workings 2, right of use assets. We find the right of use asset by dividing lease liability by the fair value of the asset. Then we multiply it by the carrying amount of the assets. So we just calculated the lease liability, and it was 1,895,400. In the question, we are told the fair value of the asset is 3 million. And then let's go back. The carrying amount of the asset is 2 million. So we multiply it by 2 million. And this gives us a right of use asset of 1,263,600. So we recognize it. Right of use asset is an asset, so we recognize it under debit. 1,263,600. Alright. The final step is to recognize a gain or loss on transfer as the balancing charge or the balancing figure. So now we sum up the debit side, and then also we sum up the credit side and determine which side falls short of the other. When you do the summation, you realize that the credit side falls short of the debit side by an amount of 368,200. This is a gain because it's at the credit side. So we have gain on transfer of rights. We have a figure of 368,200. This is the balancing figure. So after summing up the debit side, you realize that, and the credit side, you realize that the credit side falls short. And so the balancing figure appears at the credit side. And any figure that appears at the credit side is an income or a liability. So we have a gain on transfer of rights of an amount of 368,200. So this answers A, requirement A. Then B requires us to show extracts in the statement of profit or loss and the statement of financial position. As you may already know, for lease liability, it is subsequently amortized. So we are going to amortize the lease liability. So we have subsequent measurements. So prepare our amortization schedule. We have our year, opening lease liability, finance cost, at 10%, that is the interest rate implicit in the lease. Then we have lease payment, we also have capital repayments, then finally our closing lease liability. So bring our Ghana cedis signed here. we have 2018. The amount we recognize in respect of lease liability was 1,895,400. Alright, then we multiply the figure by 10%. If we multiply 1,895,400 by 10%, we get 189,540. Then we subtract our lease payment. The lease payments are 500,000 per annum. Then we net the finance cost from the lease payment, and that gives us a capital repayment of 310,460. Our closing lease liability is determined by subtracting the capital repayment from the opening lease liability, and that gives us 1,584,940. This becomes the opening balance for 2019. So we have 1,584,940. We multiply it by 10%, and that gives us 158,494. The lease payment will still be 500,000. We subtract the finance cost from the lease payment, and we have a capital repayment of 341,506. And then we subtract the capital repayment from the opening lease liability to arrive at 1,243,434. Since you are only required to show extracts for 2018, we can leave the amortization schedule here. Then we are going to depreciate the right of use asset. So let's calculate the depreciation charge. Right of use asset. We recognize an amount of 1,263,600 in respect of the right of use asset, and we are told the lease is for 5 years. So the annual depreciation charge is going to be 252,720. This is the annual depreciation charge. Okay. Having done this, then we can now show extracts of the financial statements. So we have Calc Limited. So extracts from statement of profit or loss for 2018. We are going to recognize finance cost. So that is an expense. So we indicate it is a debit. When we go back to the amortization schedule, we realize that the finance cost for 2018 is 189,540. So we have 189,540 here. Then we also have depreciation. This is also an expense. That is 252,720. Then we have gain on transfer of rights. Let's go back. In preparing the journal, we had a gain, that is the balancing figure, of 368,200. So it is an income, so we are going to recognize that it's a gain. So we have 368,200. So that's it for the extract from statement of profit or loss. So again, we show extract for the statement of financial position. So under assets, we have our right of use assets. The right of use asset had a cost of 1,263,600. Then we are going to charge a depreciation of 252,720. And that gives us a carrying amount in respect of the right of use assets of 1,010,880. Then we go to our liabilities. So we have current lease liability, and the non-current lease liability. Let's go back to the amortization schedule. The total lease liability in respect of 2018 is 1,584,940. But this can be splitted into 8 component parts. This closing liability is made up of a current component and a non-current component. The current component is represented by the capital repayment for next year. So the difference between 1,584,940 and the next year closing balance, which is 1,243,434, is 341,506. So this is the current lease liability. And the non-current lease liability is 1,243,434. So we go and write that. So we have a current lease liability of 341,506, a non-current component of 1,243,434. If you sum up the two, we are going to get the balance, that is the closing balance we had for 2018, which was 1,584,940. This brings us to the end of this tutorial session. Please subscribe to the channel, like, comment, and stay blessed. Hope to see you in subsequent times with other tutorial videos. It is bye for now.